G'day folks, welcome back to another update for natural gas. Now the price has spiked up through that key resistance we drew yesterday. So we'll look at the charts in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook, as of today, February 20th, natural gas prices have surged to a 2-year high with March NYMEX contract settling at $4.28 per MMBTU, up 27.3 cents. The recent overnight spike price in natural gas is attributed to the severe Arctic blast affecting large portions of the US, leading to increased heating demand and supply disruptions from production freeze-offs. For ETFs, the ProShares Ultra Bloomberg Natural Gas ETF, BOIL, has risen 80% over the past 3 months, reflecting market optimism about expanded production and export opportunities under the current US administration. Conversely, the ProShares Ultra Short Bloomberg Natural Gas ETF, KOLD, has declined, mirroring the inverse performance, and the United States Natural Gas Fund, UNG, has also seen significant gains, aligning with the upward trend in natural gas prices. Related to AI demand, regarding AI data processing, the energy demand is substantial. Data centers which power AI computations consume significant electricity, a portion of which is generated from natural gas. As AI adoption grows, the indirect demand for natural gas in electricity generation may increase accordingly. So looking at natural gas first off, we started looking at the long-term trends, and we look at the monthly, the weekly, and the daily. And on the monthly, for all of the charts, we've got these moving averages, and these are available in the description below, so just go to there to reference that video to learn how to draw them on your charting software. But on the monthly, you can see there it's broken above the moving average band on the price chart, but more importantly, it's above that moving average band on the CCI. So we want to see those aligned, and at the moment, nice bullish move on the monthly. Likewise, bullish momentum also on the weekly. That's actually given us a bounce this week so far. In the last couple of weeks, it's been bullish and still hovering above that moving average band of the CCI, but also the price chart. On the daily, now I'm going to put in some lines here to help demonstrate some key resistance that have been breached overnight. We did have this key resistance up here at 40.60, and we did say that was a key area. If it could have actually bounced down from there, or if it broke through that, that would have been a more positive outlook for natural gas, and it's actually broken through that. So now we're going to remove that resistance area, and at the moment is open sky, so there's no sign of a resistance yet. And as soon as that happens, I'll draw one in. But at the moment, you can see there, we may see a price weakening or a retrace back towards this ascending diagonal trend line, but we'll play it one day at a time. But at the moment, bullish move on the daily with the CCI and the price above the respective moving averages. Now, if we go to the intraday chart, and I've got the 1 hour chart here as a reference. And remember, the trading strategies, we always trade in the direction of the higher time frame. So if you're trading on the 1 hour or the 2 hour, etc., you trade in the direction of the daily. In this case, the daily is bullish, so we only take long trades. And up until yesterday's video, the last good trade you would have made would have been this period back here, when the CCI broke above that moving average range. It also poked its head above the moving average of the price. So you would have gone long at that point, and you would have closed it out. We said yesterday it was just about to close that position as we were filming, and it actually did. So you would have made a nice little 9% gain in 13 hours of trade had you been trading that one. There was a bit of a false break there, but notice the CCI dropped off a bit. There's a bit of a weakening there, and then another long entry would have been made there, and you would have closed it out with a small gain there. Now, again, you'll notice the price has moved higher on the price chart, but we always pay attention to the CCI, because that's the area we need to look out for in terms of a pullback. Now, what you'll notice here as well is, if I draw a trend line between those tops, it's a very slight rise in the peaks there. So it's maybe slightly higher highs on the CCI, but a lot higher highs on the price. So I'm not going to draw a retrace yet, but you can see there that's also declining between that period. So even if you just draw it from that area, there'd still be a potential pullback, and we may see that in the coming hours. So the idea is if we see a divergence, look back here, for example, we had a lower highs on the CCI versus slightly higher highs on the price, and we drew in a target area. That was a 38% level. For those new to the channel, we take the Fibonacci back to that recent low before that divergence started, and that indicates that 38% is a minimum retrace. In this case, it fell as far as a 61%, and it fell even further after that. So we always look at a minimum retrace at the 38% level. So if we were to draw that, assuming it started pulling back from that point where it is at the moment, we will draw a Fibonacci back to that significant low, because remember, we go back to the previous low before that divergence started, and we will expect a pullback to that 23-38% level as a minimum. That's assuming it starts pulling back from there. Now, this could go, of course, go a lot higher, and so long as that CCI keeps dropping and that price keeps rising, we're going to just extend that, in which case we'll have to readjust the Fibonacci's in the target area. But at the moment, assuming it pulls back from there, that's a minimum retrace level. I'll keep that Fibonacci in there for the moment and see what happens in the coming hours. So for BOIL, same sort of scenario. We've got a nice big bullish spike on the daily, but first off on the monthly, it's still bearish below the moving average range of the price chart. There's no CCI for it on the monthly. On the weekly, we've been tracking this very long-term bullish divergence. You can see there higher lows on the CCI versus lower lows on the price, and that is still making higher gains on the price chart. So again, nice bullish move on the weekly so far, and on the daily, again, bullish movement. You can see there it's broken up through the previous resistance. The CCI is still bullish, the price is still bullish. So again, long trades only on the intraday. And if you go to the intraday chart, again, go in direction of the daily hops here along the CCI, and the latest trade, it's still been the trade today. You would have got in there, you would have got in there on that candle, and you're still in a trade because that hasn't broken into that moving average range on the CCI. So at the moment, if you were in that trade, you're making 21% gain in 11 hours of trade if you were trading that period there. Again, I prefer to take profits when it hits that moving average range of the CCI as opposed to the price chart. Don't cry about these pullbacks, and if you're going to get out with minimal gains, because you don't want to get caught out with your pants down if the price does break suddenly, and often it does break suddenly on the price, as opposed to the CCI gives you an earlier warning. For KOLD, it's been bearish on the monthly for a couple of months now. There's no CCI for the monthly. On the weekly, you can see there as well, pretty strong bearish move, both on the CCI and the price. And on the daily, we've actually broken through that support. Now I'm going to remove that support for now. Not open skies, but the reverse of open skies on the downside. The CCI is still dropping, so no sign yet of a reversal. And as soon as I see a reversal in there, I'll keep you notified. But at the moment, there's no real sign of any pullback. So let me just go to the intraday charts. So on the intraday, looking at the 1 hour chart, again going in the direction of the daily, we take short positions only. And your last trade to have taken would have been when that CCI broke below the moving average range on that candle there. And you're probably about closing it out now, I'd say, because a nice 20% gain in 11 hours of trade. I'd suggest that's going to pull back in the next hour when the market opens. But at the moment, a nice return. If you haven't already closed it, you would have been wise to take that return, that close of the position when at least when it touches that moving average range. And lastly, looking at UNG on the monthly, it's broken, just sticking its nose above that moving average range ever so slightly. The CCI has been bullish for a couple of months now, so slight bullish momentum on the monthly. On the weekly, it's been bullish for a couple of years actually on the CCI versus lower lows on the price because of that bullish divergence, and that's still rising, so that's a positive. And on the daily, that's also spiked up past the previous resistance. Bullish move on the CCI, bullish move on the price as well on the daily. So long trades only on the intraday. And if you go to the intraday charts, again, we had a very minor bearish divergence here. Lower highs on the CCI in our last video versus slightly higher highs on the price. That pulled back, see that 23%, hit that target area and bounced out of there. Again, I don't trade these divergences. I look at them as potential exit signals if you haven't already exited using the CCI, but they're just potential reversal points. Sometimes they just do this, they bounce out of that minimum range. Other times they break a lot harder below and actually collapse. So more often than not, they just bounce out of that range eventually. Now the latest trade you would have taken would have been when on that candle there, close of that candle, and you're still in a trade potentially. But again, 11.5% gain in 11 hours of trade. It looks like it's going to close out possibly if it touches that moving average range. To support the channel more, hit that like and subscribe button and share the video.
For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.